What's up, traders? Welcome to 7minutemarket.com, utilizing technical analysis to suggest direction based on human emotion. Today is May 13, 2012. This analysis is for entertainment purposes only. I do not and or will not make any recommendations to buy or sell anything. This is simply my opinion. Alright, in this video we're going to talk about stocks and not the actual market. The video before this was about the market, so go ahead and feel free to look at the video prior to this one. Alright, let's get started. All right, in the in the 7-minute market update video previous to this one, I talked about next week being the Friday of the options expiration, and normally next week 90% of the time it's very volatile. This is a chart of Apple, and what you can see from Apple is we have this down move here and this consolidation pattern. The thing about Apple is, and especially next week, they have this thing called a option or price pinning, and that can affect the stock market itself. I kind of went through it a very little basic understanding of what it is in the video prior to this one. However, the pin or the strike price for Apple is at 600 flat. Therefore, there is a possibility. I highly doubt it will, but there is a possibility that Apple may spike into the $600 range and kind of stay and kind of linger there until Friday, and or if not Friday, the end of day closing, based on open interest, which is only a 60-40 chance that this may happen, that we may close at around the $600 price. Okay, for Apple. However, as I see it now, not using the option or the stock pinning theory, what we basically have is this down move and this consolidation period. Now, what I would like to see is Apple actually get up into this level here by the end of Friday next week, either Thursday or Friday, before I take a short position. I do have a mathematical calculated line here, which just so happens to line up with this pivot point there. Apple may not come straight down into it, but it's not too far off. It's not hard to believe that Apple couldn't actually get down here. Okay. The next thing that I think that it may give Apple a difficult time to get to 600 is we have this falling trend line here. We also have these two moving averages here, and we have this slightly but not very powerful, minor resistance point there. And we have come down. We've broken down this, bottom support line here. We come up. They were able to save it, and then the next day they brought it down below it, and they were able to save it, and again and again until last week Friday, when they were unable to save it. They got it to pierce, but they were unable to save it. This to me shows a lot of weakness in Apple. So what you have here is this down move and then the sideways movement before another down move happens again. There's an anomaly next week, and it's going to be very volatile, and there is a possibility that Apple may see 600 before turning back over. Okay. And bottom line is Apple is the market leader for the tech sector. Moving on. Let's look at the market leader for the finance sector, and that's JP Morgan. Now, JP Morgan had this nasty downgrade that happened on Thursday, I believe. And what happened was JP Morgan took a huge hit from this downgrade, and they basically said, they lost $4 billion or there's a potential that they lost $4.2 billion. However, it is verified that they did lose $2 billion in being traders, basically. So what that caused, or what most people thought, was that because the markets follow JPM, and normally that's the case, JPM took a huge hit on Friday, but the markets didn't really necessarily agree with that. So the markets actually had a little bump versus JPM that actually fell like a rock. Okay. JPM found a little bit resistance on this 200 moving average. As you can see how powerful the 200 is. And you have this pivot point here. Just like that. Well, actually, we can grab the bottom of the body of the candle, and it lines up perfectly with the 200 moving average. Will we actually see a bounce? It is possible, but we did get a down move on a lot of volume, so we may just trade sideways a little bit, kind of getting more of a boost to come down. I actually have a calculated level here, and this level is about $30.62. Let's get an exact price. Exact price is $30.64. If JPM actually can get down here, and actually look at that, it's right at this pivot point here. JPM can get all the way down here, which is, it may not even get there because it's a far ways more down to go. But if it does, then I may take a long position on JPM. Would I take a short position now on JPM? Probably not. I mean, this guy could, obviously pierce down here for Monday. But what I'm looking for is a consolidation period, before I take a trade back to the downside. And obviously, if we can get through this calculated line here, then we have pretty good support down here. All right, the next stock I want to look at is Google. We have this nice trend line on the bottom over here, which coincides with the 200 moving average. We came down and we're now consolidating in a bearish manner. I do have a calculated level here, so there's a potential that GOOG could reach there. However, the only reason why I don't like Google is we do have a lot of support here. We have the trend line moving up. We also have the 200 moving average. It is in a bearish weakness pattern. However, we have the 20 moving average right into the price, and we also have the 50 moving average right above there. Okay, so we do have some room for this for Google to pop first before it comes back down. Right now, the bias in the midterm is bearish, but in the short term, you just never know with next week's whip. It's going to be kind of whippy, up and down, and so we're just going to have to see what happens. If we can consolidate, best case scenario is we consolidate right into the 50 moving average, in which case taking a short wouldn't be so bad. However, this 200 moving average here is it's not going to be as strong the more we consolidate. Okay. Keep in mind, when I take a long position, I'm not saying that I'm gonna take a long position and hold it, because we are in a confirmed downtrend. Taking any type of long position would be a counter trend trade. Any type of counter trend trades, you want to be very careful, and you want to get out as soon as possible and take profits. When you're with the trend, because the trend is your friend, you just have to remember that. You can put break-even stops or sell half and then let the rest continue down. However, if you're doing a counter trend trade, my style of trading is get in, get out, take your profits, and you're good. So this is the chart of the GOD, which is the ETF that tracks gold. We broke out of the symmetrical triangle here. We came straight down. I didn't think we would come down this soon. After it came down, it kind of consolidated. I was waiting for it to hit the 200 20 moving average, but it wasn't able to get there. We also had the 618 giving it a little bit more support, but then it was able to just break down. Now we're kind of consolidating sideways. We went up on Thursday, and then we kind of came down again on Friday. If we can consolidate a little bit more up to this level here, then I may take another short on gold. And then I also have a target price here, which just so happens coincides with this pivot low. Now the most bullish case that I see for gold, I mean it's not really bullish, but the reversal or pullback I see in gold is a possibility that we actually may come back up to retest this line here, which used to be support and now resistance, but I really highly doubt it gets there. I mean, there's a lot of resistance up here, so I'm just looking for a 50% retracement, and before we come back down here to test this level here. Okay, so this is your 7-minute market update. I should say your 7-minute market stock update, and thank you for watching, and I'll see you in the next video.